Welcome to Growth TV. I'm Carolyn Vallejo. 2023 was a year of inflationary pressures, high interest rates, and recessionary fears, which kept global M&A activity at its lowest level in a decade. Today, Tuan Nguyen, an economist at RSM, joins us to talk about his economic outlook for 2024 and how macro trends will affect the middle market. Tuan, welcome to Growth TV.
Hello, thanks for having me.
Let's first start by talking about some of the major economic trends that you're anticipating for 2024.
2024 will be the year when we begin to experience the new normal. And first, when we refer to normal, what we really mean is that in 2024, we believe that the economy is capable of achieving its soft landing goal with growth stabilizing to 1.8%, the kind of growth that we observed pre-pandemic. And in our base case, inflation will continue to normalize toward the target. And it's expected to end the year around 2.5%. Now, however, this is not quite the 2% target rate that the Federal Reserve is aiming for. And this is where the new aspect of the equation comes into play, which we believe will be with us for the next 3 to 5 years at least. In the upcoming economic period, demographic changes, labor shortages, and re-globalization are expected to lead to more pressure on pricing, which means we're going to see higher inflation target. We anticipate that this target is going to be around 2 to 3%, obviously significantly higher than the 10-year period leading up to the pandemic that everybody was accustomed to. And if you've been following our prediction closely, we've been talking about this new normal for quite some time now. And so far, everything seems to align very well with our predictions. That will then be the recipe for the Federal Reserve to begin cutting rates around this summer. And we think that the Federal Reserve is going to cut at least 100 basis points to around 4% by year's end. And surely rate cuts is going to help economic growth. But to our clients, the middle market, who are paying a lot more than 4%, 5%, that might not be enough.
Right. Tell me more about the middle market. How is this new normal going to affect the performance of middle market businesses in the year ahead?
For the middle market, we observe a clear pivot toward normalization, especially when we look at our middle market business index, which surveys executives from middle market firms that represent the real economy. And companies have been preparing for recession for quite some time now, and they are now ready to turn the page to become more aggressive with their investment and business plans. With less pressure from inflation, recession, and interest rates, we think that there'll be a slight rebound in M&A activities and deals in 2024. Our forecasts are pointing toward 4 to 5% increase in deals and volume in 2024. Now, of course, we always have to talk about risks around the outlook. To us, the number one risk that we're going to see in 2024 is actually stronger than expected growth, which could really result in interest rates staying higher for longer with potential significant consequences. Our middle market firms are paying around 10 to 15% for borrowing costs, and clearly these rates are not sustainable. And we are moving toward 2025 when the maturity dates for many companies start approaching. That's going to be a problem for middle market firms. And really, that is when the long and variable lags that everybody has been talking about will exert the most pressure on businesses.
Absolutely. Continuing high inflation, but increased M&A activity, it sounds like a bit of a mixed bag for middle market businesses. How would you say that middle market companies can position themselves for success in 2024?
We believe that higher borrowing costs and more persistent labor challenges will going to stay with us for at least 3 to 5 years. They will force businesses to become more strategic with their investment, whether it's on AI, on automation, or digitizations, and anything that helps with labor retention and productivity will be the number one focus in 2024. That means flexible work models, again, investing in AI and automation or digitization will continue to play a crucial role moving forward. Also, as the pandemic exposed how fragile the global supply chain was, with how uncertain the next period of reglobalization is going to be, we think that every firm that is sensitive to supply chain disruptions should really work toward mitigating the risks around global supply chain disruptions.
So, middle market businesses and businesses of all sizes, it sounds like, have a lot to look out for this year. Tuan, thank you so much for joining Growth TV.
Thank you.